Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, March 6th, 2012 is sponsored by Realtik. Alright, let's get right into the mix. Markets are having a sharp downside move today. Dow is down 191 points, NASDAQ down 41 points, S&P down over 20 points. Basically 1.5% sell-off across the board. Now again, if you were a member of InTheMoneyStocks.com, you have been slowly accumulating shorts over the last week or two, and again, we are now rocking it with these shorts. Just to give you an example, and I talked about this one yesterday, Caterpillar, I moved out of half of my position yesterday on Caterpillar at around the 109.55 level. That was a gain of $6.50. Today, I'm making even more money on this short. Take a look at the daily chart. This was my short entry right up here. This is my short entry, folks, and I gave this live out to the Research Center intraday stock chat members. Look at the collapse on Caterpillar. Profits are rolling into members here left and right. In addition, MasterCard was another short I gave out. MasterCard was a short. This is my entry right up here, folks. You couldn't have done it any better based on proprietary methodology here at InTheMoneyStocks.com. The MasterCard chart has collapsed down, kissing the 20 moving average. In the money amazingly here, well over $17 again in the money on this current trade here as well. And again, bottom line is, if you were a member here, you knew that we were getting into a range where a cycle date was on the verge here. We're right in the midst of it now, coming up to it. And again, at this point, we believe that, again, you have a pivot top in the markets. The question is, which bounces are we going to get and where do we short? All right, now bounces, essentially it's been pullbacks have been buying opportunities up until now. Well, guess what? Now it's bounces to specific levels can be shorted time and time again on this market. And again, if you're a free trial member here of InTheMoneyStocks.com, if you're a member at InTheMoneyStocks.com, then you've been getting the proprietary data. And again, you're making money in this market. All right, let's go over the spiders here. Let's talk a little bit about what's driving this market down. Continued worries out of Europe are surfacing again. Now, again, a week, 2 weeks, 3 weeks, 4 weeks ago, 5 weeks, 6 weeks, 7 weeks, 8 weeks ago, no one cared. No one gave a crap, frankly, about Europe. It was a non-event. But as you come to the timing cycle, this is when it starts to pick up on emotion. This is why cycles are so important. Everything in life is a cycle. You have the seasons, you have the months, you have the years. You know, there's rotations. Everything is done in a rotation. Even a presidential term, as we all know, is a cycle. All right, and again, to understand how it relates to human emotion is why all of a sudden the panic starts to set in. Now, there's nothing really new out of Greece that's any different than what it was a week or two ago or a month or two ago. But it's the fact that the timing based on the stars and the stripes and everything else out there is aligning, and that is what's going to create the downward move. And that is why we've been accumulating these shorts and now why we're in the profit zone making money hand over fist while most investors probably bought in near 13,000 on the Dow. I mean, geez, man, could the media have hyped that anymore? Just ridiculous. Media hyping 13,000, 3,000 on the NASDAQ, getting the little guy to jump in, and now the little guy's losing their money. That's the nature of the beast, though. You gotta get it to the point where you're avoiding the Wall Street hype and focusing on the charts. You read the charts, you know exactly what's going on. One thing I want to point out here on the Spiders daily chart, here's your pivot top from 2011, May 2nd, right? Now, twice you closed above this level, once here and once here. This was on the 28th of February, and this was on March 1st. Now, the amateur looks at this chart and says, oh, we closed above that level. It's a breakout. The pro in the money stocks user knows that without confirmation, there is no definitive signal of a breakout there. And sure enough, what happens? The In the Money Stocks members are right. Proprietary analysis comes through. Look at the market here. Not only that, but you have a river theory gap down, which I can't explain to you guys in this video because it's a free video, but it's another proprietary technical analysis key that we've developed here at InTheMoneyStocks.com, which is very, very significant. When you get a river theory, chances are we're going right here. I mean, essentially, over the next week or so, we should come into this level. Now, it doesn't necessarily mean every day is going down. What it means is, eventually, with bounces along the way, in the next 2 weeks, I would say even a week and a half or so, you're easily into this level, if not sooner. And that's where you're going to meet a ton of support. There's just a ton of support right around there. I would say the market probably goes to about 132 and change. So another $2 fall on the spiders is very likely over the next week or so. All right, but bottom line is, if you know the proprietary methods, and if you don't know, by the way, there's a 7-day free trial. Research Center is geared towards swing traders, intraday stock chat towards day traders. I'll teach it to you all. I have no problem teaching all our secrets out to those of you that are members. If you're not a member, you're not going to learn. You'll continue to be caught up in the hype and lose money in the markets. There's no reason why at any point over the last couple months in this market since this year began, you've been a losing trader here at InTheMoneyStocks.com. I've given out small caps in January and early February that we made 50 to 100% on. Multiple. I'm talking about 5 to 10 at least as swing trades. Now we're making money on the short, large players here, whether it's Caterpillar, whether it's MasterCard, whether it's the S&P being short, even Microsoft pulling back today very nicely. All right, Apple, again, one of the culprits. If we take a look at AAPL here, this thing collapsed again. This is a definitive top in Apple as well. They have their big announcement on their iPad tomorrow. The fact that it's bounced off the lows, the more it bounces, the more I think it sells tomorrow. If it continues to sell off towards the end of the day, then you might actually get a bounce tomorrow instead of a sell-off. Again, usually whichever way it journeys up or down, it'll go opposite on news. And again, Apple, again, good support at the 20 moving average, but still very, very overbought. And I'd be very scared to be long that stock right now. Now after the pullback, obviously, if you're a short up here, you're taking half off at the lows of today and then riding the rest with the break-even stops. So you're pretty much safe there. Taking a look at other stocks, Google, very important chart on Google. If you remember, we had talked about a possible breakout here. This has now failed, and a river theory failure too. Very significant. Google, in my opinion, is going back towards here to the 200 moving average. Okay? What else do we have here? Let's take a look at some other charts. ExxonMobil getting hammered today, although it's into the dual moving averages. There's a key trend line on Exxon here that I think we all need to be aware of. This trend line right here. If you close below this trend line, it's a major breakdown on Exxon. And again, just connect the pivot lows. You have this pivot low to this pivot low to these pivot lows, and then now you're at it again. If you get below here, watch out below on a closing basis, folks, because this stock could collapse very, very quickly. Chevron, let's take a look at Chevron, another big player here. Chevron nearing support. Chevron still seems to be okay. Interestingly enough, look at this. You have a trend line right here. You can connect these little pivot lows all the way through. You're not even right to that yet, so you still have a little bit more downside for a Chevron to go before it even hits support. But again, this chart actually looks a little bit stronger to me than the Exxon chart. Exxon looks like it's near a breakdown. Chevron looks like it still could hold up for a little while. Taking a look at Amazon. Now, Amazon's been the one bright spot in the market today, up most of the day, although it is negative now. If we take a look at the intraday chart as I bring that up for you guys, one thing I just want you to draw your attention to, look at this massive pop it had, and then a good reversal. But either way, down 34 cents on Amazon, which is a $180 stock, when the market is diving today, is not a bad showing. And the reason why it's not falling more is very simple, because it has not broken this trend line yet. When this trend line breaks and you close below this, that is when Amazon will collapse. As long as it stays above that level, it can continue to hold up. Learn the methodology. It's an In the Money Stocks proprietary methodology. We teach it to you here. You can literally trade anything, commodities, currencies, stocks, ETFs, markets. I don't care what it is, where you trade. You can trade out of England. You can trade out of any part of Europe, Asia. The methodology is universal to all things. That's the beauty of it. Just like any real methodology should be. You know, it shouldn't matter if you're trading rocks or cattle or oil or stocks. It should work. And ours does. And that is why we consistently profit month after month, day after day. All right, taking a look at a couple other stocks out there. Let's take a look at Baidu, B-I-D-U. Good little dump on Baidu here, although it's into the 200 moving average support. I don't think Baidu is going to have significant support until this area. This is actually a pretty nice little area right here. You have the pivot low, 50 moving average. If it were to come into that on the daily chart, then it should be at support in that area. All right, let's take a look at a couple other things. The VXX, which is the ETF that tracks the volatility index, having a good day today, trading at $25.94, up $1.78. Very, very nice move. This is actually at the highs of the day now, so looking like we could actually start to sell off a little bit this afternoon. And let's take a look at the spiders on an intraday basis, and the spiders are nearing the lows of the day again. Very nice little sell-off. And again, this could be looked at as a bearish consolidation pattern underneath the 20. And again, it looks like we're right at the lows of the day now on the SPY. Your next major support for a scalp in the afternoon session on an intraday basis of the SPY is right here. 134.30, 134.25 in that area. That is going to be a big level. I will be scalping that myself. Okay? So just for those of you that are day traders, I've gone over a lot of daily chart support levels and resistance levels, but this is more of an intraday. And again, spiders are at the lows of the day. Beautiful little sell-off here as the market continues to see some pressure. Apple's starting to come down a little bit again. If we go back to the intraday chart of Apple, you can see this little bit of a breakdown here. You want to see a close below this pivot low here, which is the after the bounce, the low pullback. And then if you get below there on a closing intraday basis, you should collapse back down towards those lows. All right. But again, a solid sell-off. IBM is down over $3 today. Very nice reversal on IBM because the IBM broke out and then it failed. And a failed breakout is very important, folks. A failed breakout is extremely important in terms of a big move in the opposite direction, and that's what IBM has going on now. So over the next few weeks, I expect IBM to actually go lower at this point. But again, I will be looking for new opportunities, whether it's a long or a short, based on the methodology here at InTheMoneyStocks.com. Come join us. Take the 7-day free trial at InTheMoneyStocks.com to the Research Center. That is your swing trade haven. If you're an investor, 401ks, IRAs, swing trade accounts where you're buying and looking to hold for a few days to a week or two to even a month, the Research Center is what you're looking for. If you want intraday analysis, if you want to ask questions nonstop, then obviously the chat room is for you. Okay? And again, come to InTheMoneyStocks.com and start living the dream, folks. We are here and we're teaching everyone that comes to us to live this dream with us. Take care, folks.